Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you. And we've got some nice tools built into our web trader and an app that help you to do the risk management side of things quite a bit simpler. We'll go through some of those features as we work through maybe some trade strategies. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, if you're not trading on mobile yet, you can find our app under the trading platform section. And also you can just go to your app store and search for it, AvaTrade Go. You'll find in the Google Play App Store and the Apple App Store both. You can download the app, and it allows you to trade on both the MT4 and MT5 accounts from one location. And then to trade from our web trader, you just log in from the upper right corner here. And the web trader and our app have the same functionalities, the same trading tools. So everything we go over in today's session, you'll also see those tools are available within our app as well. Now, we did a session yesterday evening, and the technical side of things we were looking at primarily, and it had a good look on gold yesterday with taking into account the fundamentals. If you paid any attention to some of the announcements yesterday, in particular, the U.S. had the early data on the jobs numbers come out, the ADP, they call it Advanced Data Payroll, and it showed a slowdown in hiring, less jobs created than expected on that early data. Now we'll see what the data is when the actual numbers come out tomorrow for the non-farm payroll jobs numbers. It's a major announcement that the U.S. has once a month. And so that's tomorrow, and there's a lot of anticipation as to whether there will be a big slowdown also in those numbers when they come out. And you know, as the jobs numbers weaken, which they showed yesterday, they might be, the US dollar tends to weaken along with it, because there's anticipation that as the job environment in the US slows down, that then the FOMC committee and the decision makers of monetary policy in the US might finally see fit to start lowering interest rates back down. The short story on that is they raised interest rates multiple times to try and bring down inflation, and they're still looking for enough data figures to show that inflation, in fact, has come down enough. It's really not to the target yet. It's come down quite a bit, but not as low as what they want to see. And part of that is the job situation. Wages and employment has still been strong in the U.S., and so that's helping inflation to stay up. And so they're actually kind of bizarro world right now in terms of investors looking at the U.S. data, where if it's bad news on the jobs front, the market actually could cheer that and go up further, because they would anticipate maybe rate cuts to come sooner if the data is bad enough. And so it's been, bad news has caused the markets to rise, and good data has caused the markets to pull back. Because the better the data, the more investors think, well, they can't lower interest rates yet then. And so that's kind of the situation we're in, coming out of yesterday with the advanced data payroll showing weak jobs numbers, and the market going up in response to that. I think the NASDAQ, some other indices hit all-time highs in the US in particular, and I think gold made a bit of a climb. We did some trades based on the weakening USD in yesterday's session. This is one that it's sitting in profit, but we did pay for protection on this through tomorrow's NFP announcement. So that's something, if you haven't looked at using that feature, the Ava Protect feature is available on gold, silver, and FX pairings. If you think you have a feel for what's going to happen in the coming hours or coming days, but also that there's data coming out that could cause things to go flying the wrong way, then you might use something like Ava Protect, because it's a flat cost for a defined time period for protection, and you get all the profits are yours. And if it goes the wrong way, any negative that occurs on the trade during the protected time period gets added back. So this is looking like it's going the direction we anticipated. We backed that up with a pending order on gold, down a little lower. So we'll see if it pulls back and hits the pending order. From the perspective of the first move, we hope that it doesn't, and it just keeps climbing. If indeed those jobs numbers come in lower than expected tomorrow, we could see a further momentum push with the USD weakening and commodities and perhaps the indices climbing against the US dollar. Now, given that fundamental news backdrop and the technical moves that have occurred already, now we get into looking at, well, what's the fundamental news today and tomorrow then? And how can we make further potential moves based on that situation? So if we first take a look at something like the market buzz, everybody's been hearing about NVIDIA, and it's just been astronomical, the rise that NVIDIA has had. Now, a lot to do with the AI boom, the AI technology and the chips that NVIDIA is producing. And if you want to know, well, what's the latest news on NVIDIA, you can come to the market buzz, or for any stock or instrument that we offer for that matter. You can look up crude oil, you can look up gold, you can look up natural gas, you can look up Microsoft, you can look up certain currency pairings and see what news is there out there about that instrument. And the bigger the circle, the more news that we've found on that particular asset or instrument. So if we click on NVIDIA, we can take a look and see some things real quick. You know, it was a couple weeks ago and a week ago and a month ago that when we look at NVIDIA, we keep seeing that the price may rise 27% or 25%. It hasn't changed. As much as it's risen, it still says it might rise another 27%. Now, at some point, there will be a pullback, right? But consistently, this trend analysis has been dead on a number of these instruments, including NVIDIA. At some point, like I said, there'll be a pullback. But if we want to look at this trend analysis, the next target is 1327. Between 1300 and 1327 are the take profit lines. And you'd say, okay, well, there must be resistance up here. No, that would be another all-time high. So there's no resistance up at 1327. That's just a certain percent climb that's being predicted. And so this is the signal that it could climb to 1327. I believe it's at 1200 something now. So this 27%, a chunk of that already occurred. Okay, so you might look and see, where does NVIDIA open today? Maybe wait until the non-farm payroll numbers come out tomorrow. Maybe it gets a big pullback from the volatility, but certainly it looks like the trend analysis says it could climb further up above 1300, 1320, 1327. And then, and by the way, NVIDIA just passed, I think it's Apple for overall value, market cap value. And so NVIDIA is the #2 ranked company, only behind Microsoft now, for most valuable company in the world. And I think I read an article. It said NVIDIA rose here. I think it's here. Here it is. How much NVIDIA grew in 6 months, equal to Amazon's market cap. So NVIDIA gained in the last 6 months the entire value of what Amazon is worth. In 6 months, it gained that much value. Just a tremendous growth. So a lot of energy has been fed into all of the tech stocks, or many of the tech stocks, because of NVIDIA. It's brought investment into related products and companies as well. So if you want to read about NVIDIA, you can click on the articles, load the entire articles if you want. There's a synopsis here, a summary, or you can read the entire story. Takes you to the source of the article, and you can read the entire article and learn all about whatever instrument you're looking to trade on. read the fundamental news, okay? The latest breaking news, and look at the trend analysis and then see where you're at. You know, if this is predicting up to as high as 1327, we could pull up the chart then. If you agree with the fundamentals, now you just need to do the technicals. And, you know, let's bring up NVIDIA. Let's go back to the market buzz. See if I have the ticker symbol. Make sure I'm typing it right. NVDA. Or N, if I'm spelling the whole thing, NVI. Okay. I think I might need to go to my MT5. Yes. Okay, so NVIDIA is on the MetaTrader 5 platform. And what's nice is you can switch between MT4 and MT5, no problem. One click. And this is an advantage of trading with the web trader. From one location, if I want to fund both accounts, I can trade from the same platform without having to log out of MT4 and log into an MT5 platform. So now I can find NVIDIA, and there it is. You'll notice that on the MT5 platform, there's a larger selection of instruments, especially in the stocks and the ETFs, the cryptocurrencies, etc. Okay, so if we want to bring up the NVIDIA chart then, and we can see where it closed was 1223. Okay, this was the last candle yesterday, up at 1223.24. So that signal was showing take profit at 1327 was the upper one, and the lower take profit was about 1300. Okay, so you still have quite a ways to go, over $100 an ounce or a share to get to the upper take profit, and about $80 a share, a little less, to get to the 1300 mark. Okay, so you can have your take profit programmed maybe just below the first take profit suggestion, $12.99, something like that. And if this opens with a pull down, maybe you like the entry point, or maybe you want to wait and see if it's uptrending. But in any case, we can see the breakdown on the signal, and that we've got plenty of room between yesterday's close and the take profit suggestions. So this is a method that you can use for any instrument, not just NVIDIA. You can look at the trend analysis in the market buzz, you can read a few articles and have an idea. If you find the price you like, where the technical support, resistance, and take profit suggestions are, and the directionality prediction from Trading Central. And then if you like the entry point, you make your move. Okay, so that's an amazing tool, because the news is organized there for you and pulled from all kinds of sources right into that news feed. Now, something else for sure we want to spend some time on is the economic calendar. And I think what I'll do is I'm going to switch back to my MT4 account. So in case we want to place a trade or two, we'll be in the funded account. And let's then go to the economic calendar. And you can pick the date that you want. I'll pick today's date starting out. You can pick the countries you want included in the economic calendar. And I pay mostly attention to the high level announcements. I did include the medium level in the filter, but I could eliminate that and only have high level announcements if I want. Okay. They tend to get the larger movements. Now, the way the economic calendar works, if you're new to things, the last numbers that came in are in this column. The predicted numbers for today's are here, and the actual numbers show up here once they come in. Below this red line, we're moving into the future now. It hasn't happened yet. So coming up, we've got a rate decision from the ECB, okay, the European Central Bank. It's a big deal. They're expected to lower the interest rate from 4.5% to 4.25%. This tool, the volatility tool in particular, really can help you analyze with just a few clicks what kind of movement do you expect on different currency pairings with this rate decision. Okay, so first of all, you can pick the currency pairing you prefer. In this case, it's a European announcement, so it's the euro versus whatever you want to pair it against. Then you pick the time frame. I'll leave it on 4 hours after the events. And then I can qualify the events only if they came in above forecast, below forecast, or matching forecast, or all events together. What we'll see is it has not come in above forecast. It has not come in below forecast, not in the past year plus. In fact, each time it has matched the forecast. And what we see when the rate decision matches the forecast, and particularly if that forecast is to lower the interest rate, you would expect that the euro might weaken with a lower interest rate. Okay, in general, interest rates, if they're higher, they tend to strengthen the currency because it becomes more expensive to get with higher interest rates. And if you lower the interest rate, the currency becomes cheaper to get. You can take a loan for less cost. And so the lower the interest rate, the weaker the currency because it's less expensive to get a hold of it. That's the general trend. You can see it's not 100% of the time, but what we see here is when this comes in matching the forecast, almost 2/3 of the time, the movement is down after 4 hours, okay? And we're not talking down in a small way. Average range movement, nearly 82 pips of movement in that 4-hour time period. Now, some of that range movement is up before it goes down, okay? But that's the average range movement within those 4 hours. What we see is 63% of the time it ends up down, and the movements down tend to be a bit larger than the movements up when it matches the forecast. So if indeed it comes in like the past and matches the forecast, it seems you have an advantage to sell on the euro against the USD. Now, you might say, yeah, but I don't know that it matches the forecast until the numbers come in, and then the movement happens within seconds. What I can show you is it's not the case. You see, after 4 hours, it's 81 pips, 82 pips average range movement. But in the first 5 minutes, it's only 16.95 pips. So about 17 pips movement in the first 5 minutes. And some of that movement's up. So, you know, the biggest move down was 20 pips, 21 pips in the first 5 minutes. And it shouldn't take you 5 minutes to place a trade. So if this comes in matching the forecast and you want to play those statistics and think, well, the majority of the time it goes down if it matches the forecast, and you place your trade within a first minute or 30 seconds, it's likely to even be less than this range movement. Okay, and then you see after 4 hours, we're looking at this biggest movement went 132 pips down. Okay, this one went 76 pips. This one went 53 pips. Okay, and a couple of them went small and a few of them went the other way, which you'd put a stop loss and only have a small loss. And the ones that went the right way, after 4 hours, you could shut them off and potentially have a much larger profit. If you do this 3, 4, 5 times, hopefully you win 60% of the time, right? With larger profits than losses. If the future turns out like the past did, okay? Now, certainly all bets are off if this comes in higher than expected. If it comes in above forecast, well, then the data, you don't know what the data shows should happen. Odds are the euro would strengthen if they decided not to lower it unexpectedly. That would likely be bullish for the euro. But if it comes in 0.25% decrease as expected, it looks like the likelihood is the euro would drop more than rise. Okay? And so this is what we call data-driven trading. It's very easy to put together a trading plan based on this data. As soon as the announcement comes out, if it comes in matching the forecast, statistically speaking from the past, you know it's a good idea to sell. You might not win every time, but if it turns out like the past announcements, you should win more often than you lose, okay? Depending on your entry point and exit point, obviously. Now, what else is coming today? A little bit later, and by little bit, I mean only 15 minutes later, you have initial jobless claims. We can do the same sort of look here, okay? And by the way, since there's a US announcement 15 minutes after this announcement, it might make sense, instead of trading on the Euro USD, if you're going to trade off this announcement, maybe you trade off of the Euro JPY. Okay, looks like similar statistics. After 4 hours, 63% of the time, it drops. Okay, so very similar statistics, but now when the US announcement comes, you don't have the US paired with the Euro to mess up this movement. Okay, so you can think that through and see which pairing do you like best. This one goes over 104 pips with the Euro JPY range movement after 4 hours. And again, it's almost 2/3 of the time it drops. So, and you can check the pairings and see which ones work out the best for you, statistically and distance-wise. All right, so I might do a Euro GBP or Euro JPY on this one if I then was concerned that this announcement could reverse the movement of a Euro USD on this one. So Euro JPY, Euro GBP on this, and then with this one I might trade Euro USD or GBP USD. Okay, so this one maybe we look at GBP USD and see with the initial jobless claims, if this comes in above forecast, 75% of the time, if there's more jobless claims than expected, the USD weakens. That makes sense, right? Jobless claims are bad news. So if they're higher than expected, that's worse news than expected out of the US. Almost all of the movement is up. The one that went down barely went down. The 3 that went up large. Okay, so it's 90-something% of the movement was up. Directionality-wise, 75% ended up, and one of them ended up down, which was 25%. But 90 or 95% of the movement was up. Okay, what if this comes in below forecast? It's the opposite, right? Something like 90% of the red and only 10% is green in the 4 hours after the announcement. 71% of the time it ended up down, 29% up direction-wise. Distance-wise, almost all of the movement was down. Very short stop losses would take care of this. Okay, and the rest looked like they could be profitable after 4 hours. Over 55 pip average range movement. I mean, this biggest one you'd have been looking at after 4 hours, 77 pip profit, selling from the top point here. Okay, and you know, in the first 5 minutes, there was more upward movement than down. So you can catch a nice entry point even after 5 minutes, very small range movement. And then after 4 hours, it goes the direction most of the time that's expected. Actual below forecast, that means good news for the US, less jobless claims, makes sense. The USD strengthened the majority of the time. Okay, so very powerful stuff here. Data that it would take you hours to try and put together from the charts, from the past movements, trying to match up the announcement time with the movements and the directionality. It's all there for you with a few clicks. So I'd be looking today, if I have the time, to trade on this rate decision and to trade on the jobless numbers. And I probably would be doing maybe Euro JPY here and GBP USD here. So I'm not crossing up the Euro with the US announcement. I'm trading the US announcement against the pound, and I'm not crossing the US up with the Euro announcement. With the Euro, I'm trading the Euro against something different, against the pound or the yen. Okay, very strong statistics on these two announcements. And the way to run this strategy is to try this week after week with a small risk to your balance each time, something that you're comfortable with. Obviously, you can risk what you want, but something reasonable. And after trying each announcement, maybe for 3 months, for 4 months, these announcements keep coming in each week. Okay, some of them are once a month, some are once a week, etc. But try them over an extended period of time and see how the strategy works out for you. You might find that certain announcements work better for you, and then you can zero in on those as a long-term trading strategy. Okay, now we can look at tomorrow as well. So big deal tomorrow. And what we'll go right to are the GDP number, or I'm sorry, the non-farm payroll numbers coming out of the US. okay? Biggest announcement out of the US each month, many say. Also, hourly earnings, unemployment rate. We can look at all of these that come out at the exact same time. And what the statistics show, the non-farm payroll numbers are the ones that determine the directionality more so than these other announcements. The focus is more on the payroll numbers. So the expectation is there will be a drop in the number of new jobs created, dropping from 175,000 to 151,000. Now that's already a low number, 175,000. Usually it's 250, even 300,000 jobs. So, the expectation is quite low, lower than the last low number that came in. And the lower these numbers are, the more you could see a reaction of people thinking, wow, interest rates can come down now. If this, let's say this comes in at below 100,000 or at 120,000 or even lower, you could see the markets cheer that potentially as a clue that maybe interest rates will come down. So if we use this, let's see if that's what's happened in the recent past. Okay, let's go to Euro USD. Maybe that's kind of my favorite pairing, as long as there's no other announcement crossing it up. And then 4 hours after the event, if indeed this comes in below forecast, meaning less jobs created than expected, look at that. 100% of the time over the past number of months, if the jobs numbers come in below the forecast, 100% of the time, 4 out of 4 times, the euro has climbed drastically against the USD. We're talking 89 pips, 90 pips, 83 pips, and the small one was 17 pips or so. Average range movement of near 80 pips, 100% movement up when the jobs numbers come below forecast. Now, it doesn't mean that it's always going to be 100% of the time like this, but you can see the power of these statistics, that if you could catch a nice entry point in the first 5 minutes, look, average range movement 35 pips in the first 5 minutes. After 4 hours, double that, more than double, okay, 79 pips. So you might wait, catch the entry point you like, then maybe you make a move. What if this comes in above forecast? What has happened in the past? The polar opposite. Look at the amount of red down compared to the amount of green up. It's something like 85% of the movement was down when these numbers come in above forecast. Now, it was not a huge statistical difference because 3 of them went up, but when they went up, they barely went up. And the ones that went down, it went down more often, okay? And they also went down bigger than the ones that went up, okay? But the bigger reaction was when this came in below forecast. That's an even stronger, more consistent reaction. So you might choose that if this comes in above forecast, I might sit it out. But if it comes in below forecast, the statistics look stronger to buy on the euro if I can get a good entry point. Now, the market will be moving quick right after this announcement, trust me. With the non-farm payroll, it's spiking all over the place. So you got to be patient and try and catch the entry point that you think is within your trading plan to trade on this range movement after the announcement, okay? Just be careful waiting for your entry point. Get the spot that you like if you're going to trade. This particular announcement has a very high volume of trading, but the statistical percentages are very strong if you can get the entry point that you want. And you might need to be patient. Sometimes it'll spike up. 5 minutes later, it spikes back down, and maybe then you get the entry point you want, and you'll only trade if you get the entry point you want. So pick the spot you like, and you wait for it. And if it doesn't get to the spot you wanted to enter for the direction that the numbers tell you should trade, then you don't trade. Or if you get the spot you like, then you enter. Okay? There are more announcements. You don't have to trade on every one. Sometimes you get the spot you want, sometimes you don't. This one's a little trickier because of how much movement there is on the charts with this announcement. But plenty of traders can find the entry they want, just sometimes by being patient and waiting for it. Okay? All right, any questions, comments? I'll pause for a moment. Okay, what we can do is maybe simulate a trade. Maybe we take a look at one of the indices like US 500, or we could even go to the UK 100, switch it up a little bit here. There typically is a global reaction to these announcements out of the US. So we've got some large announcements still coming, European Central Bank announcement, then US jobless claims, and then tomorrow the non-farm payroll. So we've got multiple countries and multiple large announcements to come. Now, what I see on this with the UK 100, with the FTSE, let's expand to larger candles. And what we can see is there's a resistance level here. Okay, there's resistance on the 2-hour candles. It tried once and failed, twice and failed, 3 times failed, 4 times failed. This is the 5th attempt to break this resistance. If it breaks above this resistance, we could see a surge, okay? And with the big announcements coming, if there's anything that creates positive momentum, then likely this resistance could break. And if it breaks, let's say above 82.92, that's above the resistance line. So if it hits 82.92, then it broke the resistance. So I might do a pending order in this case, knowing that there is big news coming and knowing that there's a resistance level that it tried 5 times now to break and didn't. So if the news is in the right direction and that resistance breaks, and this can hit 82.92, then there must have been good news for the markets, at least temporarily anyways. That's what the momentum would indicate if it breaks through the resistance and hits my entry point. In which case, I might be looking for it to rise to a resistance level up a little higher, like at 83.23. We see there's resistance here on the 2-hour candles that it dropped down from earlier in the week. Okay, so picking my price levels, technically I can see that my take profit, if it does break through and hit 82.92, my take profit might be at about 83.23. My stop loss, if it hits 82.92 and breaks through with a true breakthrough and it goes flying up, it shouldn't come back down below this broken resistance. So if we zoom in on that resistance level again, it's right here, 82.90 or so. And so if it comes back down below there, let's say to 82.80, then it was a false breakthrough and it pulled back down. So I take my small loss. So 82.80 could be 82.75, somewhere in that area, back below the resistance. And so I see I'm risking 690 to try and make 2070. So I could even be a little more generous with my stop loss in case it pulls back and then continues up to not hit my stop loss too easy. Let's go 82.70. Okay, now I'm still going after double my risk. Okay, possible profit 2070, possible loss 1006. Okay, and so my stop loss then is 82.70, which is down here. It would have to break through this resistance, trigger my buy, then come all the way back below what should be support, and come all the way back down here for me to lose. Okay, and if that happened, I would be losing about half what my potential profit is to my take profit. Now, once I have that set up in terms of where I want my stop loss, where I want my take profit up here at the first resistance, stop loss, if this triggers a buy, back down below where it is now. Now I just need to adjust the trade size to be the amount of risk that I'm comfortable with. So if I do 2 lots, I'm risking less than 500. If I do 2.2 lots, I'm risking less than 500, 2.5, 575, 2.8, 644, which is about 1% of my balance. 656 would be 1%, close enough for me. So a little less than 1% risk on my balance. $644 to try and make about 2% profit. Okay, 2 to 1 potential profit to risk ratio here. And so then I'm ready to go. And so, did I get my, let me check, execute when price hits. Let's see here, buy 82.92. I just need to be up a little further. The pending order, it wants it to be at 82.93.5 or higher. So it's just slightly higher on my entry, still better potential profit than risk. Okay, and I can adjust my stop loss if I wanted the better ratio again. Okay. And so now I'm back to better than 2 to 1 ratio. I'm at 82.80. And so there's a certain minimum distance you have to be. I'm still well below the support level. So if it breaks through and triggers, take profit here. Stop loss would be I have to break back below the support and hit my stop loss. And I can adjust that to where I'm comfortable. I like the 2 to 1 ratio in this setup. And now I should be free to go ahead and set that pending order. And what we're looking for then on this was to make sure we're far enough from the current price to place the pending order. Okay. And now that sets over here as an order because it has not opened yet. So there's the UK 100 trigger price 82.94. We were trying to do 82.92. So it wanted it 1.5 points or so higher in order to do the pending order. And that happens sometimes, and it's good that on our platform, it explains exactly what the issue might be. If you're too close to the live price with the pending order, it'll tell you need to be a little further away to set up the pending order. And that's no problem. It's pretty much almost exactly where we wanted it. And so those are some examples how you can risk manage using our platform. You can find directionality based on the fundamental news. You can use the signals to get exact price points that you might be interested in, like we did with NVIDIA. So when the market opens for NVIDIA, when the US market opens, you could have a look at that or some other stock or instrument that was listed in the Market Buzz. You can do the same way. All right, everybody, thank you for joining. This is a good place to stop. Get ready for some big chart movements. The rate decision out of the European Central Bank is coming soon today, followed by initial jobless claims out of the US and some big announcements tomorrow. And I'm going to keep an eye on my gold trade as well, which is sitting in a nice profit, but it's got a ways to go before it hits the price point that we were looking for in yesterday's session. All right, thank you all for joining and good luck with your trading. Bye for now.